And Dan, let's just start with kind of the bread and butter on the tariff front. And why do you think the market continues to completely shrug these headlines off?
Yeah, I mean, if you think about what the president has done in the last 10 days, is he's increased tariffs by about $167 billion. So about a 60% increase on where we were before the one big beautiful bill passed. And what you see is that the president's imposing tariffs because he believes that he has a cushion now. In a series of policy victories, he's got this big fiscal policy sterilization. Stocks are at an all-time high. He's pressing his bet to be able to get a better deal ahead of those August 1st deadlines. I mean, the EU, US, they're not very far off in terms of what they need to agree to get some sort of deal done. So I do think that the market's looking at this as a way to put some pressure to get some of these deals over the finish line in the final couple weeks. And by the way, it may not happen, Kelly. And if it did, you get a pretty big significant tariff increase. But I would remind you, the EU is going to China at the end of this month. I'm sure the U.S. would like to have a deal in hand before then. So there are reasons to do these deals. We're going to watch it play out over the next 2 weeks. And Trump just has to be careful. He burned his hand on the stove in April by trying to do $700 billion of tariffs. We're starting to get closer to that range again.
Right.
He does have some cushion, and the market's giving him a leash because Treasury Secretary Bessent's done well. But if they go too far, you'll start to see backlash in that. So it's being watched carefully. There's a bit of complacency in the market right now. But my sense here is that they're trying to at least get a couple of these big country deals before August 1st.
So connect the dots, Dan. Do you think the rally in Bitcoin has anything to do with any of this or no?
Sure, I do. I do think that there's a couple of factors going on. Once the once big beautiful bill passed, the debt ceiling was raised. And when the debt ceiling is raised, you begin to lose a lot of the liquidity that we've had in the first half of this year. And so Treasury has to figure out how it's going to finance the deficit overall. And they're making a series of moves. So number one, they've delayed how long it will take to refill the Treasury general account. Number two, they're going to change the supplemental leverage ratio rules. Number three is that they are going to do more buybacks and increase the amount of T-bill issuance. And how crypto falls into that, or how stablecoin falls into that.
Stablecoins, bingo.
Once you pass the stablecoin legislation, it creates this extra T-bill demand, and it could be as much as $800 billion. So Congress is passing a stablecoin bill this week. That should set the stage to kind of fill that liquidity. And if you're in a country and you're trying to get money out, then that the Bitcoin is a way to get around it. So it's all interlinked, all of these different policy themes, in a way that I think is very significant and underappreciated by markets.